Welcome to this weekly general update for the 8th and 9th of September, and we certainly had a huge week last week with very large moves in stocks and also in gold and silver. So a very instructive week last week and gave us a lot of indication about the future. So let's have a quick look at a summary of what happened last week. First of all, just a reminder, this is general advice only. So the S&P on the week jumped by 31 points, with the vast majority of that being right at the end of the week. So the uptrend has resumed. We had a consolidation, as we'll see when we look at the chart in a minute, for a period of a week or so, but the uptrend is clearly resumed now with two very powerful days on Thursday and Friday. And given some of the data that came out on Friday night, look for the Fed to probably move on QE3 possibly next week, so fairly soon I would think. Now the ASX 200 index ended up rising by 10 points, but there'll be, I think, some further gains on Monday morning. And we're seeing a bit of a sector rotation out of banks, which fell on Thursday and Friday, and back into resources. And I guess that's a function of the announcement out of Europe. Europe basically announcing unlimited bond buying, and so therefore Europe, which is probably China's largest market, may have a chance of picking up a bit of steam, and hence China goes better and resources go better. And so a bit of a move out of the defensive area of banks and into resources. And we also saw a big rebound in the Shanghai Composite on Friday as well, which was really pretty interesting and very instructive. The Shanghai has been looking awful for some time. Now we'll start with looking at the US dollar. It was down sharply on Friday night with that jobs data coming out of the US. It broke key support levels, so I believe the odds are that we're going to see further large falls fairly likely. The euro shot higher, as obviously with the US dollar falling, the euro went much higher and clearly broke through the 38.2% resistance level. So the US dollar, a lower US dollar is really a solution to the US debt problem, as from their perspective it is. It doesn't necessarily do the global growth story and financial system a lot of good, but certainly it's a solution to their debt problem. And looking at bond yields, the Spanish bond yields down sharply. If you remember, it wasn't that long ago that bond yields were above 7%. They're now down at 5.6, and the Italian yield came off a little bit as well, down to 5.06. So let's have a look at a few charts, and we'll start with the US dollar index. And we've been looking at this chart keenly now for some time. You can see we're in a band between 81.50 and about 83.5. A little bit of overshoot out of that, but that's okay. We were consolidating for a period of time, and you can see we've got this rising trend line that started here in August of last year, and we had further touch points in October of last year and May of this year, and then quite a bit of time around that level. Now you can see Friday night clearly a very sharp break, so that's telling you that the expectations are that QE3 is coming, and probably coming very quickly. So I believe there's a pretty good chance now that the US dollar is going to work its way down towards perhaps the 74 mark. Now that might take the remainder of this year, and there might be quite a bit of volatility, but that is definitely a very big move. Now that is a positive for stocks. If the US dollar is going down sharply, that's obviously positive for commodities and generally positive for stocks. Let's look at the euro. This is the euro. We had the move up to the 38.2% level. We then had a bit of a gradual drift up over a period of about a week or so. You can see there's just a little bit of an upwards drift, and then bang, it absolutely exploded on Friday night. So that means that we saw very big moves in precious metals in particular. Now let's have a look at the S&P. We had a big move on Thursday night on the announcement by the ECB. We'd been consolidating in this area between 13.99, which was the 38.2% support level, and the high that we'd reached about 1420 odd recently. It absolutely blew that away on Thursday night and then continued on Friday night. Now we're getting very close to some resistance, within a couple of points of some resistance, but then the next move is somewhere up around about the 1520 mark. So depending on what happens in the next day or so, we could see a continuation of this very sharp move in the S&P index. Now let's have a look at some of the internals of the US market. This is the Russell 2000 index, and you can see there's no real weakness there at all. In fact, it's been in clear uptrend now for pretty much all of August and into September. There's been no real weakness there at all, and it moved very sharply last week to the upside. So it's really across the board in the US. There's a lot of enthusiastic buying, and definitely the momentum and the trend is to the upside. Now let's have a look at the Shanghai index. So it had been looking very, very sad. We had an important support level that goes way back here to July of 2010. It almost looked like it had broken it, but then turned around and we had a massive move on Friday on the announcement from the ECB. So that's got to be a positive for our market and for our resource stocks as well. Let's have a look at gold. This is gold on a weekly chart. You can see we just popped above it a couple of weeks ago. We clearly broke out last week, and then we really confirmed it with a big surge on Friday night, which we'll look at on the daily chart. But I've been talking about gold since probably January of this year, saying it was just a matter of time before the consolidation finished, and it broke out. We looked at this triangle forming over that period of 13 or 14 weeks, and it really looked like it was going to move to the upside, and it has. Here's gold on a daily basis. So we had two big moves on successive Friday nights. This is the 31st of August, and this one is the 7th of September. So huge moves in gold. And if we go back to the weekly, you can see we've got a little bit of resistance probably get encountered just under 1800, but I think the trend is clear to the upside. Now silver has been an even bigger move percentage wise. That's been huge. It's gone from 28 to 34 in basically a couple of weeks. So it's been a massive move in silver, which is what tends to happen with silver. Now the Australian index has really been struggling as an index. Resources have been tracking down, banks have been tracking up, so one's kind of offset the other. Now we've got money coming out of the banks and going back into resources, so really you're robbing Peter to pay Paul. So the Australian index not really doing a great deal at the moment, with money moving from one sector to another. Now, so just looking at gold, ended up $50 higher on the week. So that's 3 big weeks in succession it's gone to the upside. Silver, it's made 20% in 3 weeks. Copper, also strongly higher, $3.65 a pound on Friday night, and people are trying to tell us that copper's about to break down. I'm not sure what chart they've been looking at, but it's certainly not the same chart that I've been looking at all year. Copper has stayed pretty resilient and now has made a move to the upside. Oil largely flat on the week, but there was some pretty big volume kicked into oil, which was interesting as well. This is the 6-month spot copper chart. You can see we took a sudden dive up to the upside and broke these highs that we had here in the middle of the year. So copper looking quite a bit stronger now, and that's a very positive indicator for the global economy. So the strategy overall is, it's the same as what I've been calling now for 2 or 3 weeks. It's basically buying the dips, focusing on gold stocks, focusing on non-resource stocks that have got the appropriate technical patterns, I believe is the way to go. Given the huge move in gold on Friday night, we should see a pretty robust session on Monday in gold stocks, and I think there's still quite a bit to go in that area yet. So that's it for this week. Cheers.